Hello, this is Steve St. Angelo from the SRS Rock Report. It's Thursday, and I'm doing a public video. I want to talk about what happens with 300 to 500 silver prices. How would massive silver prices impact the precious metal dealer industry? Now, I wanted to talk about this, especially to the public, because I'm hearing a lot about this, not only from members, people in the industry, also it's all over social media. Where is this 3 to 500 silver coming from? Well, it comes from Michael Oliver. He says the silver pullback should end today or Monday with the support in the mid 70s. The next move is back to 90. And once that breaks, silver really begins to take off. The target is still 300 to 500 by late summer. Now, I say it's everywhere because when you look at all the YouTube channels, Facebook, social media, articles, we see Michael Oliver's face everywhere because he's been talking about 300 to 500 silver. Now, uh, I am a silver investor. I would be very happy to see 300 and 500 silver, but we have to remember the silver market is buying and selling. So I'm going to provide my analysis of what I see if the silver price did go up that high. Now, I provided this analysis to my gold members. This is Pan American Silver's total estimated cost. That's in the that's in the red area, and the silver profit margin is in the blue area. So, what do you see since 2004? There were some profits, but nothing like there are today. And as of the first quarter 2026, I think Pan America got like 89 and a half. That's what they got for their silver. They made about a $49.67 profit margin. Look at that spike higher. Now, look at 2025. It was $7.99. That was their profit. And look at 24, $2.78. So we're seeing a huge profit. So this is the monthly chart of silver. And right there, the silver miner's cost now is getting closer to 40 and will increase as the Middle East energy crisis kicks in the following quarters. That's what I believe, but it'll have to wait until the quarters come out. But right now, with the silver price at 76, or let's call it $77, this is what it would look like if we took the silver price at 77 and moved it up to 300, that's 4x. And then to 500, that's 6.5. This is how high that Michael Oliver believes. Now, again, it's one thing, it's nice to see these high prices, but how would that impact the precious metal wholesale dealer market? Well, I asked Gemini's AI or its large language model. Michael Oliver is forecasting 3 to 500 silver by the end of the summer, which is only 3 or 4 months away. If this happens, it would motivate much more selling by clients. And we had record selling when the price hit 120 to the wholesalers and dealers. How could this negatively impact the industry? And could it also cause liquidity issues? Because it did. It took them a month to get payment. If Michael Oliver's forecast of 300 to 500 silver plays out by the end of summer, it would spark a severe systemic liquidity crisis across the physical wholesale dealer industry. While a price explosion sounds highly lucrative for the bullion businesses, a parabolic vertical spike driven by retail sellers liquidating back to dealers creates a catastrophic cash flow paradox. If silver jumps from its current 77 to 300, the precious metals infrastructure could fracture under the following negative impacts and operational strains. So, number one, instant depletion of corporate working capital. To buy silver back from a client, a dealer must pay cash immediately. If silver increases by 400%, 4 times, a silver dealer needs 4 times the amount of liquid fiat currency just to process the exact same physical volume of customer sellbacks. Most dealers do not keep hundreds of millions in unallocated cash sitting idle. Number two, fatal COMEX short hedge margin calls. Now, I know a lot of people, they tend to believe in the COMEX is manipulating the silver market. However, it does a hedging. It's there for hedging purposes as well. And the wholesalers and dealers hedge on the COMEX. So a lot of the hedging shorting is happening on the COMEX system. The biggest threat to the wholesale stability is the hedging mechanism. To survive price volatility, big wholesalers buy physical metal from the public and instantly short an equivalent amount of the futures market, like the COMEX, to neutralize the price risk. If silver rockets relentlessly towards 500, the short hedgers lose billions of dollars in real time. The dealers and wholesaler, they'll lose a lot of money. Wholesalers would face a lethal choice: default on their hedges or drain every dollar of their operating liquidity to cover margin calls, leaving zero cash left to buy metal from retail clients. And that's the problem. They wouldn't have the money to pay clients who were selling silver to them. Destruction of bank consignment lines. Most large scale dealers do not own their entire inventory. They lease it from bullion banks via consignment networks. As silver surges towards 500, the dollar value liability of those leased ounces breaches the credit limits granted by the banks. Bullion banks would aggressively freeze credit lines and demand that dealers buy out or return the leased metal, completely paralyzing the wholesaler's ability to distribute metal or maintain order flows. And this is interesting too, and we saw this. The refiners, total refiner form factor gridlock. Clients selling metal will be offloading secondary scrap, sterling silverware, jewelry, individual 1 ounce coins and bars. However, institutional wholesale markets only trade in standard COMEX 1,000 ounce bars. This creates a form factor bottleneck, which it did, and it's still going on. Wholesalers would hold mountains of physical retail silver they cannot sell to institutional buyers, trapping their capital in an illiquid, unrefined product, which they need the cash to pay more of their clients that are selling. How this industry will react in real time. This is their defense mechanisms. Number one, which we saw already, extremely wide bid-ask spreads. And I'm going to show you that's still going on. If the silver spot is 400, dealers might only offer 280 or 300 or even less. Mandatory settlement delays. Dealers would completely abandon bank wires. They would enforce 30 to 60 days or more. We could say three months, people waiting to get paid. The zero bid lockout, just as witnessed during the volatile spike to 120 earlier this year, many top tier retailers will simply shut down buyback operations entirely. They will stop answering the phones or declare a temporary freeze on purchasing retail metal until the macro volatility subsides. So at the end, I'm going to give you what my analysis, why we'll see 300 silver. But I do not believe we're going to see $300 silver by the end of the summer. So this is part of the problem. This is various dealers, junk silver buyback prices, discount prices, as of May 21st, Thursday, 2026. I've picked 3 of the online dealers, JM Bullion. They're paying their clients $23.77 under spot for junk silver. SD Bullion, it's $21.22. Money Metals is $16.06. Now, I'm quoting Bob Coleman, which I talk a lot to. I like Bob. Profits Plus is $10.25 under spot. And then Coast to Coast, Dan, who I've been working with, he buybacks at $8.75 under spot. Do you see a lot of these are large online dealers? That's where a lot of people are buying and selling. Look what they're doing. $23.77, $21.22, $16.06. And Bob and Dan deal with the same wholesalers. So why are their prices so much lower that they're paying their clients? And we see the same thing with various, this is the 100-ounce bars. JM Bullion will pay $16.50 under spot for their 100-ounce bars. SD Bullion is $10.20. Now, this is based upon when I did this, the silver price was $77.78. Again, it was Thursday. Money Metals, they were buying back. You go to their website, they were buying back $9.50. Bob at Profits Plus was buying back 4.5 under spot, and Dan at Coast to Coast was $3.10. So that just goes to show you a lot of this rhetoric out there. A lot of people are worked up now. They're waiting for 300 or 200, 300, 500 silver because they're going to sell. Well, I showed you what's going to happen if that happens. It's going to be very hard to sell your metal and get $300 for it, or you have to wait a long time, or a lot of people are not going to be able to sell if we get that massive spike, because right now we're seeing these huge discounts. And that's after 2 or 3 months since the spike of 120. We're at $77. So we just need to understand that gets much worse, 3 to 4, 5 times worse if prices really go up from here. So what I want to talk about here is I do think we're going to see $300 silver. When? Well, I'm going to be doing reports about that. It has to be fundamentally driven. Right now, I did an update for my members. Only about 0.5% of Americans are serious silver buyers. Only 0.5%. I think, according to Google's Gemini, between 11 and 14% are small buyers. They buy a few ounces. But the real of 100 ounces or more, 1,000 ounces, it's only 0.5%. We need a lot more of the 99.5% of people to understand why they need to be buying and holding silver. So when the silver price starts going back up, 77 to 100, it stays up there. We need more of that 99.5% to be buying the metal that other clients are selling. So when it comes into the dealer or wholesaler, there are more buyers to take it back out. Right now, we don't have that. And I showed you how low the junk silver premiums are or discounts are to spot price. What happens if the silver price goes back above 100 to 150, 200, 300, 500? So I think moving forward, we need to understand this is a more to mid to long-term gain. I'm very looking forward to seeing high silver prices. But again, the silver market is buying and selling. I don't believe we're going to see these high silver prices. If we did, I think it could really hurt the wholesale dealer industry. So if you have any questions or comments, I look forward to seeing them. Thank you.